Okay, good afternoon, everybody. Today is July 22nd, it's Friday. The market just closed about 15 minutes ago. Hopefully you can hear me okay. I was having issues with my headset, so I've switched to the Bluetooth. I tested it, it seemed okay. Hopefully everyone can hear me okay. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group. I was gone for a few weeks, so I appreciate your patience. I know a few of you were wondering where the take on the market was. It was in Spain. So I don't think I missed much too. So my timing worked out pretty good because the market really, went up a little bit, but I didn't feel like there was, that much opportunity. So far so good. Here is the disclaimer. Take a moment to read this. Okay, so we'll talk about the markets, industry groups, stocks to watch, quote of the week. You know the drill. We'll try to keep it same as before. Markets. So normally I have a few slides, and there were some things that I saw that were of interest to me, but what I would normally do is just email it to myself, build a folder, and then add them to this presentation. But honestly, I really truly was on vacation. I didn't do a whole lot. I looked, but I wasn't super engaged. So I don't have a whole lot as far as market. There was one that I wish I had grabbed. It showed I think it was B of A's survey of managers. Was it zero? I guess I don't know how they calculate it, but the bullishness was zero, for whatever that's worth. So as bad as it gets. So there was a lot of negative sentiment, which has contributed to, the rally off the lows that we've got. Here's another one, University of Michigan consumer sentiment on, where they see the stock market, and pretty bad. And this is, usually the opposite, right? So if everyone's bearish, the market tends to go up, and if everyone's bullish, it doesn't work as well the other way, but you can see it can stay elevated for a long time. But when they're really bullish, you can get these sharp spikes down. So let's go ahead and jump to the indexes. So here's a chart of the NASDAQ. The volume won't be up to date today, but it looks like, it wasn't much of a day today, obviously, on the NASDAQ. I don't know if it's going to qualify as a distribution day. If the volume comes surging in, it could. But, there was some just overall weakness in the market. We'll look at some of those. So, the IBD has a market in uptrend under pressure. And I know I've seen the discussions about moving to confirmed uptrend. I think they thought about it here, and they thought about it here, but it's not that great a market. There's no leadership. There's nothing new. We need, for this to be a really bona fide start of a new bull market, really would love to have some new leadership, and I just don't see it out there. So it's hard to get super bullish. And if it's the start of a new rally, it's going to go on for a long time because we've had a pretty bad bear market. I just don't see any reason to be in a hurry here. That's just kind of how I feel about it. Maybe it's because I was on vacation as well, but I just haven't been in any hurry to get invested. I've been looking for ideas, but nothing really jumps out at me and says, I'm a new leading stock in this cycle. Let's look at the S&P. And, it's very much the same. You've rallied off the lows. I think I calculated on NASDAQ, this is like 13% or something off the lows. Let's look at like the semiconductor index. So 190 to 233 is pretty good move, right? 17%. So for it to come in here seems natural. I'm really looking forward to the first pullback. I don't know if this is it, whether it's first pullback like that, but some type of test of these lows is really what I'm looking for to decide if this low is real. This low that we put in for the semis for the market is real. You're going to get some type of test of the lows. Doesn't mean it has to go down and touch the lows. I'm looking at previous bear markets for our webinar for Thursday because I think we'll go over and look at some previous bear markets and kind of how they ended. But a lot of times there's some type of test of the low later on that gives you a clue that the market is real, that the lows are in. So if we go to 09, you get a few pullbacks along the way. If we go to 03, I think the start of the bull market. I think really the eBay led bull market was here. So you're going to get some type of test like that. Let's go back and look at that. So 1, 2, 3. Here's the follow through day, and that's a pretty good test. Maybe that's what we're undergoing right now. And then it tries to go above and pulls back, and then that's a really good rally, and it tries to go lower and can't. Right. So you're starting to see signs that this market's holding those lows. Every day we get along and they don't make a new low, it's much more powerful. So and then the way it kind of see the angle of ascent, although you would like it to go higher, just from a selfish standpoint, the angle of ascent you really don't want it to be that steep. A steep angle of ascent just implies to me a bear market rally. So look at the angle of ascent here, and just kind of like manic, right? I got to get in. This is the low, right? And when you think that, it's not. You might make a lot of money in this short period of time, but it's not a real low. And then whammo, it just craters down, undercuts. And the angle of ascent on this one is a little bit better, right? It's a little bit better, but still quick off the lows like that. And then, then this one goes down and tests. It doesn't make a new low, but it did under there. So then you get the quick move off the low, but the angle of ascent's a little, just less volatility in the days, right? These days, look at the days, how they're really big. There's a lot of big days up and down. You really want it to quiet down like it does in there. It's much more quiet. So that's what I'm looking for, something like that, based on today's market. Let's go back to today's market. So you have a lot of volatility. Look at the angle of ascent on these rallies. Just too steep, unsustainable. So want something a little more that. If we can get some kind of sideways action. As crazy as it sounds, that would be healthier, and I really think it would be better for the overall potential for a longer term uptrend in the market. Let's go to the industry groups. Let's change them. Oops, not number of stocks. Industry group last week, and admittedly I haven't looked at this in a few weeks. So oil, gas, royalty trust, energy, coal, energy, solar, retail, supermarkets, medical, not enough stocks, medical, not enough stocks, medical, managed healthcare. Let's pull this up so you can see this a little bit better. And what I'm doing now is something you guys all should be doing every week. I didn't do it because I was on vacation, but normally I would kind of go through and look at this. So energy is still hanging in there. That could be where the new leadership is. If they're, they've undergone a pretty good correction, but if it's a multi-year trend, you could get some new ideas in that area. All right, so stocks to watch, and let's just look at some of the big boys like Google. Not a good day today. Can't get above the moving average. This doesn't look like leadership, right? It looks like it's they're stepping lower, going sideways. The relative strength is poor. I just don't see these stocks leading a new charge to new highs. Seems unlikely. Not impossible, but seems unlikely. Amazon, although it looks a little better short term, it looks worse longer term, right? It's the steeper, much better, much worse break. Microsoft, very similar to Google, not really going up in this rally. Apple's Apple. It's always like the best of the best. Amazingly, its relative strength line is new high, and the stock's 15% off the high. So it kind of just marches to its own beat. Tesla, had a great week on the earnings report. So, who knows? This could be rounding up here. That's a possibility. Another stock that, just kind of marches to the beat of its own drum, just hanging in there really well. So I really would like to see some new leadership. I really liked LNTH, but this was, again, the bars are just too wide and loose. From a liquidity standpoint, it's not super big, 67 million shares. Average trade is 1 million. It's just very difficult one to own. I tend to sell it into strength because I just can't. I was in it for like that day and that day and that day and just got tired of it. So it's just too volatile for me, but very tempting. And as far as possible new leadership because of the big numbers, big earnings and sales. Schwab, another one kind of in the same group. Tried to go up today. Got hit coming back. Not as good a pattern, not really much of a pattern there, but a good name, a good company as far as, potential new leadership. Look at these big earnings and sales. In the energy area, FLNG, this is one of the few stocks that I own. RS line new high, building a base. It does pay a yield, so it's probably not going to be as big a mover, more of a stair stepper. But I've been in this stock before. I think on that move, I don't believe. No, I'm pretty certain I wasn't in it there, but I've been in this one before. And there's some other stocks in the group. TNK is building a base. You can see all the stocks there in the group. Sting was one I tried to be in here and got stopped out, and then it came back really well while I was gone. This weekly pattern looks really good. I love that shakeout right down there and all the way back. But I missed it. I wasn't there to see it. I probably, one of these days would have been the buy point in hindsight. But that's a group that could, hang in there that's doing okay. So, but the bottom line is, I don't know. Like I said, I was gone. Maybe it's me, but I just don't see a lot of leadership, potential new leadership. What drove the move off the lows is just, the junk coming back up. So ARC 35 to 45 is a big move, right? It looks like nothing on the chart. That's a 28% move. What are some of the stocks like Carvana, CVNA? Oh gosh, it can't even move off the lows. I know there was some stuff that was moving off the lows that drive the indexes up because they have a little bit of exposure. So the bottom line is, as far as stocks, slim pickings. I'll do my work this weekend, try to find some new ideas, see what's holding up, and I'll just keep doing that until the timing is right. But I just don't see the timing being all that right as we sit here. All right, let's jump to the quote of the week. And it's from Michael Burry. It's a tenet of my investment style that on the subject of stock investment, maximizing the upside means first and foremost minimizing the downside. Let's talk about that first part. I don't know if you play poker, but in poker, every dollar not lost is a dollar gained, right? So you might have a really good hand, but if the other guy has a better hand and you recognize that based on the flop, based on what's out there, based on his betting patterns, you don't want to put more money in there just because you think you have a really good hand. So the math is cruel. If you lose 10%, you got to make 11 to get even. You lose 25%, you got to make 33 to get even. Just so much harder when you dig a hole. So staying within earshot of your all-time highs is the best strategy, and that means sometimes you might give up some of the gains by doing that, because you might be taking off some exposure when things seem like they're going really good. So I really think this year, I noticed there's another tweet where like 90% of the active fund managers are underperforming the market this year. It's been a really hard market for almost everybody. So just surviving, if it turns out to be, and we're about halfway or a little bit more than halfway. If it turns out to be like that, you just want to survive this year. That way you're ready for the next year. He also says, I have no view on whether the market, broadly defined, will fall or rise during the coming year. The prudent view, in my opinion, is no view. So I sometimes think, and even for myself, we get caught up in, is it a bull market? Is it a bear market? Is it a bull market rally? Is it a bear market rally? So you just don't need to label what the market is doing. Look for good stocks. You like the way they're acting? They're not going to act all that good if the market's really bad. I think that's my experience. You put on your exposure and you just let the market pull you in slowly but surely. If there's nothing to buy, then you have to sit it out. And sometimes sitting it out, you feel great because the market's going down. And sometimes, like this last rally we've had, I haven't participated at all, and you just feel like, you look back and say, I feel like I could have made some money, because I'm always weary of when the market undercuts lows that you're going to get a rally. And but I don't normally try to participate in that just for the sake of the market. The market's just very difficult to do that. But this has been a pretty good rally off the lows. You think, I could have made some money doing that. That's okay. I'm okay with it. Sometimes, like this quote says, just staying close to your highs. You're down. If you're down 5, you're down 10. Even if you're down 15, you can overcome that in a hurry if the market gets good. You get down 30, 35, 40. You can't. I don't want to say you can't overcome that, but you're looking at a long, long runway. The next bull market, if you get down 40 or 50%, the next bull market is just going to fill that hole in. It's going to take you back to where you once were. Because you're going to have to you get down 50, you're going to have to make 100. So let's say you just do really well in the next bull market, you make 100%, you're back to where you were before. So I'm playing it close to the vest for whatever that's worth. We'll see if the market can get better. I think it's really hard here. I just don't know. I just don't have any kind of probability of where I think the market's going. I'm open to the fact that it could be the start of a new bull market, that the low is in. I'm also open and leaning the other way, that this is just going to be a counter trend rally for a little bit, and then we're going to head lower. But I don't have any high conviction either way. I don't believe that's an 80% probability. Therefore, I want to bet on that. Let's see what happens next week and see if there's any setups. I will be back next week. We'll do the Thursday with Harold and myself. But I'm back from vacation, so the take on the market will be on its normally scheduled times. Contact information, marcussmith@investors.com, 800-424-9033. Thanks a lot, everybody. Have a great weekend. Bye-bye.